don't know what's up with the Russell. It's definitely more volatile compared to the other market indices, but this is kind of unprecedented. We had a 2 standard deviation move on the 13th. Here we have the moves that are labeled based on the returns volatility since 2021. That's not right. Since 2021, let's see, since 2000. Still going to be pretty big though.
Yeah, wow, this thing's been moving.
Even since 2021, like I'll take it. It's a like 1.5% standard deviation since 2021. Here, let's do since 2000. It's actually about the same, which is kind of interesting. I'll swap this out real quick. Sorry about that. So IWM, it's 1.5% returns volatility since 2000. So we had a 2 standard deviation move on the 13th. 1 standard deviation moves to the upside, like 3 of them, and then a random standard deviation move to the downside. So about 50% of the moves in the last 2 weeks have been bigger than a standard deviation, with one of those being bigger than a 2 standard deviation move.
I feel like a good trade would be like long Russell, short Qs.
Honestly,
like
at this point, like
if you try to play like maybe a little pullback in the Qs and maybe a little like rally in the Russell, because it's been kind of smashed all year a little bit.
I think like the correlation between these two, I can also check that, but looking at the correlation, this is like the 3-month rolling correlation, is 0.4. So it's not the lowest that it's been between the Russell and the Qs, but it's pretty low. It's typically around like 0.8, and like between the Russell and the Qs, it's typically lower than like SPY and the Qs, for example. But like 0.4 is very low, which could make an interesting opportunity for like pairs trading or doing any kind of like spread trading between two underlyings. I tend to look at like co-integration instead of correlation, but correlation can still give you like a good idea of maybe like what to look for. It's an easy calculation, so relatively speaking. But this means that like you're getting a little more diversification with IWM and like with IWM and the Qs, which is kind of nice. But for me, I have a Qs position on and a Russell position on. And because they're both having vol spikes at the same time, the discrepancies in price action are not helping me as much. That's why sizing is so important, just because like you can have like non-correlated underlying price movements, but if vol spikes across the market, then you still get screwed, right?
Right.
Which is
That's really cool. Are you using like R to like build all these charts, or
I use Python?
Like, I use Python. Okay.
I use Python, but they're both like kind of pseudocode, so. Yeah, so basically if people like in chat will shout tickers out, so like someone on the Bad Trader platform was like, hey, check out Netflix. I'm going to put some slides together in a second. And that's why I like to go back and forth. So like you pull up your platform, I'll put the slides together. We can come back to that. So if you have any other tickers to look at, that's why I can put them together now.
Okay. Sweet.
But
that's actually really cool.
For a couple more, just a couple more slides. We got the Russell. Yeah. So the Russell's on its 6th consecutive up streak, or up week, I guess. This code measures Monday to Monday. So if we make it I guess it would be Tuesday actually, because I think markets are closed on Monday. But if we make it to next Tuesday and we're still up, then we're going to be on our 7th consecutive up week for the Russell, which is actually, it's not its longest streak. Its longest streak recorded was 10 weeks, but we're still we're getting up there for sure.
Yeah, no. Definitely. Do you think we're gonna continue to rally like into next year, at least in the Russell? Or
I'm hoping not.
I hope not too. I
kind of hope not. This has been I was talking about this on my stream with Luis yesterday, because we were kind of talking about our New Year's resolutions and our biggest trading lessons from the year, and mine was underestimating upside risk. And that's because we've had a really unprecedented amount of movement to the upside. Like the S&P 500 rallied like 12% or something just in the last couple of months. Coming back into the markets a little bit, we've had a 6th consecutive up week streak for Russell. The Qs RIP have hit all-time highs 4 times this year, and all of them were in the last couple of weeks. I think at least 2 of them were this week. So this is just again, kind of unprecedented. I think the rally and the Qs are what I've been the most I guess not surprised by, but the most a little shaken by, I guess, because that's been pretty volatile growth for sure. We're on our 8th consecutive up week for the Qs. If we close positive on Tuesday again, we'll be on our 9th week, and honestly, we're kind of on track to do that. So the Qs are just completely raging. We're seeing that in the S&P 500 as well, although a little bit less volatility. So we're seeing our 8th consecutive up week for SPY. And if we close positive on Tuesday again, then it's going to be 9. So we're definitely seeing a big rally for sure. Seeing a big rally in gold. This gold just all over the place. So not a ton of like big moves in terms of like volume, but like definitely some of these big moves, especially this 2.2% move to the upside. And now we have another 1.3 standard deviation move today. So gold, it's just like its return volatility, it's a little bit lower than the S&P 500. Since 2021, it was 80.89%. So it doesn't take a lot, I guess, to breach that one standard deviation threshold. But when it does, it really sucks. And we actually saw a 2 standard deviation move on the 13th, which was super duper fun for me.
Yeah, massive moves in there. Wow.
Real massive moves for sure. We got gold as well, which is just like flirting with all-time highs. Just flirting with all-time highs. It's hit all-time highs like intraday a couple of times in the last couple of weeks, but it hasn't closed on all-time highs, so we're not, in my opinion, there yet. But we just been flirting with it, man. This is like, ugh. So we're really right there. We've been absolutely flirting with it. So I'm just like, again, I'm kind of like trying just because I trade like the futures options, because the product is so big, they're just so much more volatile, which I always do defined risk. I always go wide. That's one of the reasons why I like those types of strategies, because you can go really wide on your short strikes and still collect a decent amount. But as a result, when you have like these types of moves, the P&L can be super volatile and the BPR can be pretty volatile. So I'm kind of dealing with that right now. I feel bad for whoever is dealing with Nike. We got Micron, which also had earnings this week. And this is another one that's kind of all over the place. Its returns volatility since 2021 was about 2.62%. So even though it's up 1% today, that's like half a standard deviation move relative to the last couple of years. And we had really big, just like 8.6% move right after a 4% move to the downside. So this thing is just like all over the place. Rip Micron traders for sure. This one, it's not near all-time highs. The last time it hit all-time highs was actually in early 2022, so about a year ago. But actually 2 years ago. Oh my God. No, year ago? I don't know what time is. But last time it hit all-time highs was in January of 2022. So, but I wanted to put this in here because you could just see like the vertical trajectory from the last couple of weeks, which I was like pretty surprised by. I thought that was impressive. So we're not near all-time highs, but definitely seeing some crazy growth. Also looked at BlackBerry with this nice like supple 12% move to the downside. For any of those real degen traders out there that are trading BlackBerry, AMC, or GME, or any of those stocks. Also wanted to look at Moderna, which has been all over the place. Moderna, J&J, Pfizer, there's a lot of volatility in some of these biotech stocks. Moderna, I like a little bit more just because it's more expensive and I like going wide. So like for this one, like if I was going to trade any of them, this is probably the one that would be my favorite. And we've just had really big amount of upside growth with like a 4%, almost 5% move to the downside like 2 weeks ago. But for the most part, just like a lot of volatility in here for sure. About 50% of the moves from the last 2 weeks have been bigger than a standard deviation. We got Pfizer. Actually, get rid of this one. Yeah, we got Pfizer. And then this one has been even more volatile. So I'm personally not trading this. This is a little too much for me, where we had 2 standard deviation move to the downside, 2 standard deviation move to the upside, and 70% of the moves in the last 2 weeks have been bigger than its returns volatility since 2021. So definitely a lot of volatility in here. I know some people that are doing Pfizer plays. I'm not sure if you are. You said you actually had a Pfizer.
Yeah, I just closed it, but it was not an easy thing to stomach.
Yeah, no, it's kind of it hurts the pride a little bit.
Yeah, I think there was a point, like, I think there was one day where Pfizer, I think it was, here, December 13th, it fell from like 28 to 25, and my strikes were 28 and 32 for the strangles, so I was down like quite a bit, and I just held on to it, and then somehow made it back to 50%.
Yeah,
so I just got out of it as soon as I could.
Yeah, that's how I'm kind of feeling about my Roku trade, especially with this. Like I talked about this. I don't have a slide in here right now, but like some of the commodities, like USO, for example, is one that's been going well for me, just because like it's still got a decent amount of IV inflation because it had some couple like big moves in the last couple of weeks, but it's calmed down a little bit since then, which is what I like to see because I like vol plays, I like neutral strategies. Pfizer is not one of those. But so we got Pfizer over here. We got Marathon, which like, it's bad when your returns volatility is 8% compared to like bonds, which is 1%. So it's extremely volatile, a lot of upside movement in here. So 12% moves to the upside, 10%, 12%. 50% of the moves in the last 2 weeks have been standard deviation moves. Rip Mara traders.